Hello, dear students. Let us understand about valuation of stocks and bonds in security analysis. So, under the subject security analysis and portfolio management, so especially we are going to deal with this specific topic, that is valuation of stocks and bonds. Of course, we all know about stocks and bonds or different securities. You know, when we are doing any investments, obviously we'll be investing in stocks or else we'll be investing in bonds. Probably we have to get some return in future, right? So how to evaluate this? So we'll be discussing about introduction to security analysis. As usual, we need to know what is that first, and valuation methods for stocks. Third is valuation methods for bonds, right? So introduction to security analysis. So it is a process of evaluating different securities. There are different securities like stocks, bonds, debentures, okay, FDs, gold, so many stocks are there. Okay, so we'll be evaluating about all the different securities, okay, to understand its actual value, that is intrinsic, that is real worth of the security, real time value, okay, by the help of different methodologies, okay. So that analysis part is actually called as security analysis. So role in investment decision is something like security analysis. Obviously, it plays a critical role in investment decision. So after doing this analysis part, and then we are involving into this process of investment, so we come to know a clear idea, we'll get more insights about the securities. Yes, if we invest in this as a security, definitely we can able to get some good return in future, okay, by minimizing all the different risk and all. So next thing is types of securities. So common stocks, bonds. Common stock where it represents the actual real ownership in a company. We can say, yes, shareholders, okay, and they'll be getting a privilege of voting rights inside a company and the benefit like capital appreciation in the future, okay, capital gain. And next part is like bonds. All these bonds, debentures and all comes under debt instruments. Okay, usually all these things issued by corporations or governments. Okay, where here return will be we can get in the form of interest. Okay, so thing is like that rate of return. Okay, that principal at the maturity date. So risk is somehow less when it comes to bonds. Risk is somehow less, but we can get some good return. Okay, so next is so valuation methods for stocks. So earning and revenue analysis, discounted cash flow method. So these are the two fundamental analysis concept like yes. So earning and revenue analysis, what is this? So assessing a company's income and growth. Yes, how a specific company, so its income is what received in this particular financial year, and also we are just calculating its growth. All these things by identifying entire financial health of the company, that is actually called as earnings and revenue analysis. Identifying the profitability of the company, revenue, so its entire performance. Okay, next is what? Discounted cash flow method. This is another method comes under fundamental analysis where it calculates the present value of expected future cash. There are two cash flows, as you all know. One is, basically when it comes to time value of money, like present value and future value. So present value is what? Today's value, and future value. If today is 1,000 rupees, tomorrow obviously it is going to become like 1,100. That is the future value. So discounted cash flow method is another different method whereby you can estimate a stock's intrinsic value, real worth of a company, actual worth of the company. Okay. And next is relative valuation techniques like PE ratio. We call this term as PE, like price to earnings ratio, where it compares a company's share price to its earnings. So for one single price, what is the earnings? That is earnings per share. By means of one share, what is the earnings? Okay, so that will obviously help the investors to, for, evaluating the stocks in future. So how much earnings that they can able to get to that specific stock. And dividend discount model is the another DDM model. So whereby by predicting the future dividends, what will happen this for this particular stock, how much dividend can be able to earn in the future, in the near future. That is this dividend discount model. Okay. So valuation methods for bonds like present value of cash flows, yield to maturity. So present value, as we discussed now, PV, FV, present value is the current worth of future cash payments. Okay. So that calculation is what the major thing when it comes to bond pricing. And yield to maturity is something that how much yield is gained. Okay. So is the total return on a bond on some security. So until it matures. So maturity period, if it is for 5 years, if it is for 7 years or 10 years, whatever may be the period. So what is the gain? You are just summarizing it. You are just understanding, calculating the entire thing. So types of bonds like government bonds and corporate bonds. So government bonds or debt securities where it is what issued by government. Very simple thing. Okay. One good thing is risk wise, it is low risk, or we can say as zero risk, risk free. Interest, it depends upon economic conditions. That is the return. Okay. You get some moderate return. Okay. So when it comes to corporate bonds, usually it will be issued by all the different companies. Main purpose is to raise their own capital. Okay. So here you're having little risk. At the same time, if you consider return also will be very high. Again, it depends upon the market scenario, interest rate, all these things. Okay. So these are all the different concepts of risk valuation of bonds and stocks. Okay. Thank you.